Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is May 28, 2012 and we are currently looking at price action on our 10-minute chart for the Euro US dollar pair. And if you look to the left, I have this yellow vertical line drawn in which divides last week's trading session from the opening of this week's trading session. And as you can see, the market had gapped up higher and there was reasons for this gap up, but if you look overall for today's trading session, you can see that we had traded within a 100 pip range. And for the first half of the trading session, we rallied up about 88 pips up to this resistance at 26.24. And from this resistance up here, we began to see our pair slide lower and we began to fall about 100 pips during the second half of this trading session. So the pair lost most of its gains for today. But like I said earlier, if you look to the left, you can see that upon the weekly open, you can see that the pair had gapped up higher and began to climb, primarily due to some good news coming out of the Eurozone over the weekend about Spain's decision to recapitalize one of their banks, Bankia, which is the fourth largest bank in Spain, with capital injections of about 19 billion euro. They're expecting to inject or add 19 billion euro to Bankia, to the Bank of Bankia, in the form of government debt. So the hope is that they would use this government debt as collateral for more funding from the ECB, so the ECB can give more capital for the bank. So this news added optimism to the market, but of course we also heard news coming out of Greece that the latest election polls are now showing that one of the pro-bailout parties, the New Democracy Party, is now in the lead to win a majority of the seats in the next election in June. So this also helped to improve market confidence and dampen fears of a disorderly default of Greece and a potential exit from the Eurozone. So during our Asian trading session, we saw the pair climb 88 pips higher until it reached resistance at 26.24. And it was at this major resistance up here that we saw sentiment change and price began to reverse and slide lower as Spanish banking fears began to creep right back into the market and begin to weigh on investor sentiment. So then, of course, this happened during most of our European trading session, even going into our U.S. trading session, and the pair dropped 100 pips from this resistance in an attempt to try to close this weekly gap to the left. So you can see that it made attempts to try to close this gap, considering that there could have been a few market orders or offers that needed to be taken up at this level. So you see how the market made its way, pushed its way down to this gap. And right now, we're currently in a consolidation pattern. The market is consolidating ahead of the Asian Open. So with that being said, if I were trying to look for an opportunity to enter a trade in today's market, then I would have done so after price had reached this resistance at 26.24. Now this 26.24 resistance is very significant because it was actually our previous yearly support or bottom that was initially formed back in January. And of course, for those of you that have been trading for some time, you would know that what was formerly support or a bottom in price previously would now become our resistance. So of course, we know that this was an area of resistance. Now if I go to my 1 hour chart, you can see that on a few occasions that the pair had tried to test this area of 26.24 as support or resistance on a few occasions. So then this was an area of historic support and resistance, but it was not only that, it was also where our 38.2% Fibonacci retracement level is right here. So we see an area of confluence. Now this retracement level was formed from the last Friday's bottom here at, I think this is at 24.96, and this whole drop here from the weekly high here at 28.24 down to the to the bottom here, our new yearly low at 24.96, I think, for, you know, and this is what formed our 38.2% Fibonacci retracement level. So you can see that this is a good area of confluence. So it was a good, you know, place to go short if you saw a bearish reversal pattern forming or some type of bearish confirmation. So if I were in front of my platform at this time, then I would have waited for price to form a bearish reversal pattern or give a bearish signal, and then I would have entered a sell order around 26.13 upon confirmation and placed my stop loss a few pips on the other side of this resistance at 26.24, and then I would have took my profit when price had reached this support here at 25.70 for about 43 pips. Or if I were a little bit more aggressive, then what I could have done, I could have held out onto this trade until it reached my profit target at 25.32 for about 81 pips. So this was one trade entry with two possible outcomes. You could have closed here at 25.70 for about 43 pips, or you could have closed out here at 25.32 for about 81 pips. So this was one entry with two possible outcomes. But let's say you weren't up here at this time. You could have also entered on the pullback here. You know, the pullback up to this price level here at 25.95. You could have entered a short here, and if you would have held out onto your trade, you could have made, you know, about 60 pips on the ride down, on the slide lower. So then right now you can see that we're in this consolidation pattern, and we're now awaiting the breakout during our Asian trading session. It can either break to the upside, or we can see more slides in the period and a continuous decline lower. But that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay, then bye.